Probably over enthusiasm, belief that there's no risk out there. The economy has been stronger than most people expect, stronger than the Fed wanted it to be, let's face it. And I think it's got an unsustainability there. We've had more strength in employment than probably is commensurate with the state of business. So I think that strength in the labor markets, it's the good news, bad news kind of situation. Goods inflation had a big jump during the pandemic. That's faded. We were running over 9% year-over-year inflations, and they're now down, 3 or 4%, depending on what measure you pick. But that doesn't mean prices are coming down. And people are looking at it and say, wait a minute, I'm paying 50% more for this or that. So it isn't just the rate of inflation, it's the level of prices that are very disturbing to a lot of people. I think it's been because of the employment situation. And a key reason for that is because businesses spend so much time and energy hiring people during the labor shortage period that they're very reluctant to lay them off now. You haven't had that weakness in labor markets that I think you normally would have had and would have given a recession starting last year. That doesn't mean we won't have one, but it means whatever it is, it's delayed. Very well could be. I mean, if you look at the normal harbingers of recessions, the yield curve, the leading indicators, you look at small businesses. Small businesses are very sensitive to economic conditions because they don't tend to be very heavily capitalized. So they got to react in a hurry when business starts to ease off for them, and they are cutting back on their employment and other areas. So there's a lot of very traditional and extremely reliable forerunners of recessions. And normally recessions start, this is the average, 2 years after the Fed starts to raise rates. Well, it's been 2 years. I think the Fed is going to reduce interest rates, but they want to make sure that inflation is killed and killed dead, because I think the Fed is in no rush, and why should they be? There's no clear evidence that the economy is falling apart. As long as the employment is as strong as it is, the Fed is in no rush to cut interest rates. Sure, they can overdo it. That's their history, overdoing on the upside, and on the downside, they're no better forecasters than any of the rest of us. But I think the Fed is going to be extra vigilant this time. Well, I don't know that it's all that as strong. I mean, if you look at job openings versus the employment gains, that gap is narrowing. But the labor market is not what it was earlier. You look at other things like wage gains, people quitting, and it's the service inflation which really is the difficulty for the Fed. And if you look at wages in the service area, they're rising 5 or 6% year over year. Now that's hardly commensurate with the Fed's target of 2% inflation. So I think that's the key hang-up right now in terms of the Fed. So there are a lot of preliminary signs of weakness in the labor market. Oh sure. It's just a delayed response, but I don't think it's going away. It is a self-reinforcing cycle because when you get layoffs, people have less income, spending is weak, so you have reductions in business sales and profits. I think it's in the cards. I think it's related to consumer. It's the service areas which have shown the consistent strength. Now, services don't tend to be as volatile as goods. I mean, if you have hair and I don't, you still got to get a haircut. But there are certain services. You're going to go to the beauty parlor. Let's take the other side of that. Come hell or high water. So there's certain services that you have regardless. So they are much less volatile than goods, but that doesn't mean that there aren't a lot of discretionary services out there. And of course, one of the things we've seen lately, people going out to eat, going out for entertainment, cabin fever. We want to get out after the pandemic. My wife and I were, looking for restaurants to go out this weekend, and the ones we wanted to go to, hey, forget it, bar place only, no tables. So it's really telling you that there has been that sort of, but these are discretionary spending items. There's a lot of signs that people are being more cautious in their spending. The election is very important to what happens to the economy. Now, you've got clearly different views under Trump and Biden. Biden has been much more interested in spending, and of course, like any president going into election, he wants to get reelected, so why not spend more money? Trump is obviously much more unpredictable. He's much tougher on the immigration issue. He's much more concerned about China and protectionism and so on and so forth. And so you do have a difference in philosophy here in terms of spending and more restraint on imports and on immigration and so on. I think you do have different philosophies. Now, is this going to make a lot of difference to the economy immediately? Probably not. Probably not, but it depends on the economy. If the economy goes in the tank, hey, any president, any Congress, they're going to spend money. That's their natural instinct. But I think if you don't have that, then I think we will see much more emphasis on these differences depending on who's elected on areas like immigration and protectionism. I think it's simply changing. Now, it takes time for some of these other countries to tool up to get to where China has gotten over 4 or 5 decades, but it is happening at a rapid pace. Places like Vietnam, Bangladesh, India, I'm very keen on India. If you look at India, they've got a lot of advantages that China doesn't. First of all, it's a democracy. India also has inherited from the Brits the English language, which is kind of handy in today's world. India has a legal system. Again, it's not what we would like, but it is a legal system. And of course, population. Birth rates are declining universally, but they have collapsed in China. That was the one-child couple policy. And unless they had huge productivity growth to offset the decline in working-age population, China is just going to shrink on the international scene in coming decades.